Hey everybody, Ryan Doss with Doss Financial Group. There's so much information and recommendations on the internet right now. There's literally millions of videos out there from people telling you what to do with your money. So, how do you find the right advisor for you and what questions should you ask? Well, we're going to go through that here in the next few minutes. A couple of references to start. I have an article that was published by Forbes a few years ago called The Financial Advisor Alphabet Soup: How to Choose an Advisor. And then when you're meeting with them, the 10 questions you might consider asking them. So we'll put the links at the end of this video, but please be sure to check those out. So far and away, the best place to start is to talk to friends and family who you respect and admire, and quite candidly, you think make good money decisions, and ask them who they work with, and ask them maybe if they have a couple recommendations. That's a great way to skip a lot of the nonsense and get real experience and a real honest opinion of somebody. Along with that, there's a couple things you can do. The first is you can visit the website cfp.net, and I'll show you here. The CFP is short for the Certified Financial Planner designation. That is the gold standard in the industry. Any advisor that has a CFP designation has tested and been proven on virtually every area of finance. It's incredibly comprehensive, from tax to estate planning to investments to budgeting, cash flows, the whole thing. There are a tremendous number of advisors that don't have the CFP designation. And that doesn't mean they're a bad advisor, but there are a lot of people who just pass a simple test or so and call themselves an advisor or a planner. And the CFP was designed to differentiate that. It's a much higher standard of entry. And so if you go to the CFP website, you can click Find a CFP Professional. And a little biased here, I just put our address, and they're Trendon Peacock, our colleague, and myself, and soon to be added Brendan Sanchez in our office, who just passed his CFP. So that's a good place to start. You can narrow by your area. Another great way to do that, once you identify a few CFPs, is to go into Google and look up the firm. You can either Google something like top financial advisors in my area or Google the firm, and most of them now will have reviews. Again, a little self-serving. We have 74, and you can read all sorts of comments, good or bad, from real clients. And that's going to give you a little bit of an insight to test drive. Okay, how is their experience? What are they talking about? What aren't they talking about? So that can hopefully get you to narrow the list down to maybe 2 or 3. The next step, I think, is critically important, and we talk about that in the article, which is don't just go with the first person you talk with. This is a lot like getting married. You want to date a little bit and get to know them and see if the fit is right. There are a lot of great advisors out there who might be a terrible choice for you because they just specialize in different things than what you're looking for. Maybe their asset minimums are too low. Maybe they're too high. They work with people who aren't like you. So that's where you're going to want to consult those questions. But essentially, we recommend you interview 2 to 3 different advisors and pay close attention, not so much to what they say, but how they make you feel. Are they speaking to you in a way that makes sense? Are they getting away from the jargon, even though they seem technically proficient? In terms of age and such, it's not a bad thing to have a younger advisor. The credentials will give them good information and education, and they're going to be around a long time. On the other hand, somebody who's been in the business 40 years has a wealth of knowledge, but you have to wonder, how long are they going to be around? If you're in your 60s and you're getting an advisor in his 60s or 70s, maybe they retire in a few years, and unless they have a great succession plan, they're probably not going to be there to answer your questions. I would always ask them about their succession plan and their strategy. Another thing that should be asked that often isn't is, what is their role in the firm? There's nothing wrong with being an employee, but what type of employee are they? Do they have any equity in the firm? Do they have a long-term vision? Otherwise, what's to stop them from moving on to something else? Owners of a firm, typically they've built it with their blood, sweat, and tears, and they're not going to go anywhere. So you can typically count on a very long-term relationship. How are they compensated? This is a very fair question that you should absolutely know. It's amazing when we sit down with new people and we ask about their current advisor and what their fees are, and they have no idea. Some people, they think it's awkward or they're embarrassed to ask. We tell everybody the exact fee at the end of the second meeting, and It's on every monthly statement. It shouldn't be a mystery. Now, there's a lot of debate about how fees are charged. Some people charge commissions. Most advisors now are fee-based like we are. Some are a flat fee. And there's no right or wrong. There are certainly various opinions on this. But the biggest thing is that it's disclosed and you're comfortable with it. It should pass the sniff test. Nobody works for free. Don't believe otherwise. The other thing is to ask them about the types of clients they work with. If you're walking in with $3 or $4 million and they spend the whole time talking about people with $20 million and all these advanced techniques, that may not be a good fit for you, even though they might be really smart. That's not the same type of planning that you're going to need. You might be a small fish in a big pond. How many clients do they work with on a regular basis? If somebody's bragging about thousands of clients, what type of relationship, what type of bandwidth, what type of accessibility are you going to have to them? At bare minimum, they should be returning phone calls and emails within 24 hours. In my opinion, they should have a good staff with them who can take calls and answer your questions when they're not in the office or not available. It's just too important to leave it to days and days on end. So in terms of technical knowledge, you can ask them too, do they get into estate planning? Do they get into income tax review? A lot of financial advisors are not going to file your income taxes, but they should be at least reviewing them. They can catch a lot of things, and it really helps with your planning. At some point, you're going to be talking about taking money out and making distributions. And even though CPAs are great, they're really not at the forefront of this throughout the year. They're more on the back end looking at your returns. There is a lot to understand and a lot of nuances on the second half of life planning where money's coming out, and it's really important to structure and do the withdrawals correctly, or you may pay a lot more tax than you're used to. So could go on, but we're going to stop there. Please review the articles. We hope they're helpful. And if we can be of assistance, please reach out.